All right, greetings, traders. Thank you very much for showing up for this TED Talk on trader psychology. So I don't do TED Talks. I actually don't even do trader psychology. So when David and Anka asked me to present on this topic, I thought to myself, okay, I'm an analyst, educator, and trader, so I always prepare for these presentations like really. And I'm very excited about, announcing some major call, market timing, intermarket analysis, macro, technical, what have you. I'm really excited about sharing my analysis, but I am not one who shares my trading psychology. To me, I think this is very much a personal journey. So I don't want to dictate. I raised 3 kids. You can see them kind of in the picture behind me. And they take their own path. I kind of provide the guardrails, and then they really, hopefully I've given them enough skills that they can figure it out and navigate this thing called life, which can be very random and unfair, like the markets. I also, because I'm a mom and raised 3 children who, by the way, are now all in college, I basically became an expert in volatility. So that's basically my claim in regards to trader psychology, that I have grown up, as a woman, as a trader, in basically figuring out what works for me. And I'll never forget, I had a mentor very early on, and I would fly actually to wherever the money manager or the outperforming trader was early on, to kind of shadow and see how they did what they did. And it was very different. Everybody was different. And what I took away was basically what applied to me, what I could interpret, what I could basically put on and really make my own. So a lot I discarded, but I learned a tremendous amount. And I really learned that there are lots of money, lots of ways to make money. The trick is not to lose it. So I dubbed this presentation title that. There are lots of ways to make money. The trick is not to lose it. So what that really means for me is that I had to figure out which style of analysis I wanted to learn and then own and then become very familiar with, so that I could adapt it in all situations and then test. So that I'd become more confident with time. And that's basically what I've done over the years. But I remember when I had that first mentor who was really very much a technical analyst, pattern recognition expert, and quant, all 3 of which I really identified with and apply in huge part today. Very much pattern recognition and quant, but in a way, it was his way or the highway. And I found that to be very restrictive. And I remember saying what I had kind of opened up with earlier, which was that trading is a personal journey. And he said, no, it isn't. There's a right way and there's a wrong way. And, this was one man's opinion. And I was young and basically trying to figure out, this market from a understanding of where I fit in to the market, small guppy. Did I want to be a big shark today? Did I want to be a whale? I was really trying to figure out what I wanted to do in this market. And his comments were just very restrictive. And then I realized that lots and lots of folks, and you probably find them on FinTwit and in your own lives, that can be extremely restrictive. So it's a linear path for them. There's a right way, there's a wrong way. It makes them feel safe. For me, I'm much more flexible in my mind. I don't believe that. I believe that it's very much a dance. It's very liquid. And to stay afloat, I need to float with that motion, whatever that motion is. It might be calm, it might be rough. So hence, the fishing analog on my website. So basically that's, how it came to be. I'm founder of TradeOutLoud and I run a trading analysis business service. I have, my full-time gig is supporting clients who trade on multiple time frames and across multiple assets, all asset classes. So I take the perspective of working from a macro backdrop which is, again, my interest in understanding why the market does what it does and try to anticipate where it's going to go, pulling back in time. And then I use something called intermarket analysis, which is very much about divergences and comparisons. A lot of it's a ratio analysis, which is a bit of the quant stuff, and indicators to identify trend inflections. So from there, I can not only swim with the current in my trade setups, but I can also recommend to clients what I see. They can take it or not, but it gives me the conviction to press a particular position or basket of positions in a particular direction, long or short. So I share all of that. And then I get into the weeds and, get really on a very small time frame across what I call chase and swing duration, which could be hours, days, or weeks. But then I put together a trading plan that fits me, and I've basically evolved it over the years, and I've added and subtracted, components. But basically, it came down to this trading experience was very much personal. Restriction was not my jam. And if there was one thing I would say in a TED Talks or in a trader psychology presentation like this, the one most important takeaway, and then you can leave. You don't even have to stick around. Really, this is it. Although I will be open for questions, don't worry. And we'll drill down a little bit more, don't worry. But if there was one takeaway that I could give every single trader, new and old, scared or bold, absolutely don't risk more than you're willing to lose. And that, I think, is my number one mantra. It's in life and it's in my analysis, in my trading, based on my analysis, that I'm trying to find, obviously, the highest probability, highest accuracy trade setups for myself and clients. And I don't want to just, fire them off randomly and gamble and maybe it'll work, maybe it won't. I really I'm much more selective. I'm very picky about who I spend my time with. I'm very picky about, what I feed myself and, what I read and what I watch. And the whole point is, to me, it kind of breeds this, reflection of my trading. I'm very selective about what I want to trade as well. So what I decided, instead of doing a presentation like I usually do, which is where are we now in the markets, I've done a few of those recently, and you can check them out on my website. In fact, just yesterday, I had a podcast released with the chief strategist at IBKR, which is Interactive Brokers, the largest brokerage firm in the world. And that was a wonderful podcast, very much, connecting the theme I've had for the past year and a half of things over paper. Basically, that hard assets would outperform tech. And in particular, this year, my theme at the beginning of this year, and I came here and did a presentation on it, was that NASDAQ would underperform. So I have all my macro and fundamental and intermarket and technical reasons for that, and it's still working. So if you want to hear my thoughts, I've done those types of podcasts as well. Anthony Crudell last week did one again on volatility. So you can get a better feel for my market thoughts by following me on Twitter at Samantha LaDuc, by checking out my YouTube station, which is LaDuc Trading Channel, by listening to one of those podcasts, like I said, the IBKR or the Anthony Crudell. Those are very recent, and you'll get a really good feel for my style of analysis, okay? How I come up with themes, durable themes that then create that current I want to swim with, not against. And then how I time inflection points in large part using intermarket analysis, a little bit of sentiment, tactical as well. And then that gives me the opportunity to present, trade setups for clients that are more swing and chase worthy. So that, and also obviously you can check out my website, LaDucTrading.com. I might also add that I have now, grown up in the business as well, so that I have a little bit more notoriety or presence, and that feels good. It brings some more responsibility that now I have more people watching. I have to change anything. I'm not going to change who I am. I'm in the same house of 22 years where I raised those kids. I am who I am. So I tend to approach trading with now very, very specific parameters of my mind of what I'm looking for without letting other voices come in. And I think that was also part of the biggest trouble I had early on. And I mean, really major trouble. So, and it's probably taken more than a few years to kick it, maybe decades. But this relationship of trading is very much where you're at. So when I was younger and came in and, the 2008 drop, which I happened to be very fortunate. I was trading full time starting September 18th, 2008, right after Lehman. And I was fresh from selling my business and I had traveled in Europe with my kids. They were very young. I had sold my business because my son had a medical emergency. So let's just say I was looking for something to do because I was very underutilized. So I went into this very straightforward, I'm going to trade. No idea how I'm going to learn this, but I'm going to figure it out. Had a head for business and I wanted to explore. So I didn't even know options. Did extremely well in the first 6 months. You can imagine it was shorting without options and without any, at that point, any mentorship. So kind of like the new traders coming in last year during COVID. Seriously. So when you're shorting and everything's going down, you're limit down, limit down, limit down. Guess what? You're making money if you're shorting. So it's like, shooting fish in a barrel, so to speak. And there's no explanation for, why you're so successful other than you're just in the right direction. So I didn't know why it was moving. I didn't know anything about anything. But the first little bit, I had outsized performance. What a cowgirl. Okay, now, then you got to learn. You got to learn the hard way. Oh, there are things called losses. Maybe I should tighten this up a little bit. Maybe I shouldn't be such a cowgirl. Maybe I shouldn't risk more than I'm willing to lose. Maybe I should be in a better headspace. And I wasn't. So I lost a lot of money because I was in a really bad marriage. So that is a personal experience. I'm not going to be able to teach you that. I'm not going to be able to look into your head and heart and see if you're in a good space or not. If you have a relationship, want to at all. So this is a personal experience. I'm just sharing mine. Coming in as a cowgirl, like you all probably did if you're young, coming into the COVID, stonks only go up. And now there are a lot of losses and a lot of people are leaving the market. It's discouraging. It's painful. And some of you are sticking around. And I'm really very excited about that. In fact, there is a fabulous quote that I pinned it to my Twitter. Every successful trader was once an amateur that never gave up. So that was me. I was diehard amateur. I did, oh my God, I signed up for the Jim Cramer stuff. I read everything I could, every John Carter video. I mean, there just was I found mentors and shadowed them. So I was very curious then, and I'm very curious now. Now I've obviously got a little bit better system going on, and you will too. So my point is, this is a personal experience. You will define yours. Your interpretation of the market also has to be your own. In other words, I interpret the market in my language, just mine. I can't filter it through anybody else. I can't get anybody else's voice in my head, or else it distorts my translation of the market. Early on, that was harder, right? I had the doubting Thomas in my head from my ex-husband. I had, fears and sleep fatigue and, money. It was unmitigated stress on the home front. And it actually took years to kind of remove the energy vampires, both physically in my space as well as in my head. And I'm being really honest with you, with going into the details. I'm not a sentimental. I don't want any like emotional one way or the other. This is just what it was. And I was quiet in it, and I got through it, and it took a long time. So you might have demons, you might not. My point is, you will come up with a system that you can basically call your own. You will interpret the market in your own language. That's very important. And if you're not there yet, if you haven't figured out yet how to interpret the language, the market in your language, so that you understand it, because that's the only person that matters. Nobody else, just you, so that you can trade it with confidence. Nothing else matters. Until then, you don't need anybody to build you up or tear you down. Get away from that. You definitely don't want to risk more than you're willing to lose, because then it becomes a game of Jumanji. How many people have seen that movie? 1, 2, 3 strikes, you're out. Oh God, yes. So we've all been there. And I'm not just talking about blowing up accounts, but also personal and financial. And there's a lot of risk, and there's a lot of reputation. So I have one right now. I was very fortunate that I was featured in a Market Watch article a few weeks ago, which was phenomenal for me. Oh my God, like huge. And it's part of my higher oil yields and dollar call that I've had for the past year. So far, that's worked. But now I'm going double for nothing, right? So my call from 65 to 130 crude oil for March of 2022 came true. Fabulous. I got a big write-up in Market Watch. Now I got 260 crude oil by next year. So if that doesn't happen, I'm going to be so like, that's me, because I don't want to be wrong. And I certainly don't want to be out there putting all of my analysis and all of my reputation and my everything for clients and national media and then be wrong. So to me, it's pushing me. It's challenging me. I'm okay with that now. I never could have handled that then. So you also kind of grow into more of your I don't know what you want to call it, but your power. So that is something that is kind of the unspoken part about this. There's a lot of men in finance, we know that. There's a lot of men in FinTwit, we know that. And there's a lot of chest pounding. They have a lot of man cave bravado. It's softened as some women have come in. Some women have a lot of male energy and do the same bravado and chest pounding. But the point is, this is still a market where our voices are able to be heard. And the only one that matters is the one inside your head. So that positive, but not unrealistic, I'm talking about goals, because if you make realistic goals in life, you can also make realistic option bets. Like, is that strike really achievable, or am I gambling? Is that time frame really achievable, or I'm stretching? Is that money that I'm putting on that lotto money I'm willing to lose? How am I going to feel when I lose that lotto? So I tend to kind of differentiate in my service 3 levels of clients. The beginning level goes into my Discord product, LaDuc Discord. It's very much for new traders, a community of traders, right? You need kind of that support. You need that education. You like the ideas, the levels, the trade setups. And it's very, very, very helpful for young traders to have that community. I'm not so young anymore. I don't need that community anymore. I need to be in my head doing my analysis, doing this, this client engagement that is very much focused around successful trade execution. So all I care about is making sure that clients are safe. So they're able to interpret my vision of the world. That's the Fishing Club membership. So it really is much, much more effective if you're reaching an audience also of peers that can relate to you. It's hugely empowering also for my analysis and my trade ideas to work with clients who have the same vision of the world as I do and can interpret the market in a more sophisticated way than a beginner. Okay. Next level is my Edge product, LaDuc Trading Edge. So LaDuc Trading Edge actually is run by a client for years and also a hedge fund manager by the name of Craig Shapiro. So Craig can speak the language of hedge funds. I can't, I've never run one. Never. I've never managed other people's money. So I'm retail. I'm solidly retail. So I'm able to maybe bridge the gap and operationalize a lot of the data in the context from macro to micro. And that's my claim to fame. I'm the macro to micro, analyst. But he can actually really understand that whole portfolio diversification and compliance requirements. So he runs the Edge product, and that is a different level of institutional client. And that's not my wheelhouse. Doesn't mean I am not regarded or respected or have institutional clients because of my market timing calls, but I don't speak their language. I don't come from Wall Street, et cetera, et cetera. So maybe you can see that my personal journey is very much my own, and it's different from anybody else's, and so will yours. So some will be very focused on a linear and straight and narrow, trading setup. It's based on moving averages or 15-minute chart, or I don't care what. So you're going to figure out yours. I have mine. So I love 3 time frames: the chase, the swing, and the trend. I have charts side by side that are hour, day, and week. And they work side by side to kind of show me the power of, or the congruence of time frame analysis. And that's what I'm comfortable using. I use a whole bunch of technical analysis and pattern recognition. And like I said, a whole bunch of other, quant and macro and intermarket tells. But the point is, for me, that's what I am comfortable with. This is how I can interpret the market and then share that with clients. And the Discord folks are really into that momentum. They want the chases. They want to know what's moving today and how far it's going to go and where to put a stop. And the fishing club folks they want to understand why it's moving and how long is this bounce going to last, or how long is this bear market going to last, right? Bigger picture. So they're doing a little bit more active investing as well as active trading. Some might have very big sophistication around advanced options, and some may still just trade stocks and happy with that. Everyone interprets the language of the market themselves. And the more successful you are at doing that for yourself, the better a trader you will be. So that's pretty much it in a nutshell. I mean, I can share my stuff, and I have before as well, even on my options grid. But I wanted to kind of open it up to questions. I thought, I was talking with Tiffany, my live trading room manager, because I run one twice a day. And I said, what do you think folks would want to hear about? Because I don't talk about trader education. I don't talk about, my past, how I got here. This is, the fact that I raised a farm girl. It's about as much as they know. And then I have 3 kids. So the fact that I have basically become known for timing volatility and being able to zoom out and zoom in is my skill set, right? Sector rotation, market timing, predictions. So I'm really good with that. That's because that's where I spend my time. What are you going to spend your time on? So I know this is, very much a wide conference that Anka and David are putting on around trader psychology, but I don't know what you want to learn. So I thought I would just kind of open it up to Q&A. And I had asked Tiffany if she could also kind of post in Discord to see if anyone had questions that they wanted me to answer, which I'm happy to do, because I normally don't. I'm normally running a trading room. I'm posting analysis, write-ups. Oh my goodness, just client engagement and lots of operations and Twitter and the rest. So for me, there's way too much going on in my world of analysis across all assets and time frame to focus in and just focus on trader discipline. And no, that to me is just a job. I need to identify the positions that I feel most conviction, set up the option trade, present it to clients, right? and then manage it. So that's it. And then it works, it doesn't work, it needs to be modified, next. So there isn't really any hoopla around the result. For me, the process is much more important. If you take care of the process, the results will take care of themselves. I believe that in all things, but especially in trading. So that's basically the backstory, if you will, or the approach that I take to this whole topic of trader psychology. I was asked a few things, so that's why I thought I would just kind of address it. And then if you have questions, hit me up here for sure. I'll drill in to details, or or just answer generally, however you want to do it. But I figured maybe I can just be a resource and help for those who are struggling with certain issues. So let me answer some questions. All right. So one thing that was asked often was, what about setbacks? This is really the experience of having big disappointment. Setbacks are a big deal. So goes back to that, don't risk more than you're willing to lose, because if you treat capital as if it's disposable, guess what? You'll dispose of a lot more than you should. It doesn't mean to be stingy either, right? Because this analysis paralysis is a problem for a lot of people. And that really comes down to lack of confidence in your system. I know that's hard to hear, but realistic expectations, lack of confidence in your system. So when you can tighten that up, when you can learn, how to feel really confident in a trade, and then how to recover from a failed trade, you're doing awesome, right? Because you are guaranteed to lose money. So I often joke to clients, and especially new folks that don't understand this, because they think, oh my God, there's so much risk in trading. Okay, first of all, I'm an analyst and then a trader. So that matters, because I'm not just scratching tickets that I picked up at the deli where I have no edge. No. I have no interest. I've never gone to a casino and played, whatever, slots or poker. It's not my thing, but craps, whatever. So I love this game of analysis, solving the puzzle. I love being right. It thrills me, really, it does. So I want to approach this as a very different game of analysis, and then there's a trade. So setbacks to me are very much focused on you've pushed too far, or in my case, I overtrade. So my biggest thing is when I feel like, I don't know what, like the past few weeks it's choppy. I'm not so excited about chasing, but the point is you can, and then you get chopped up. The point is when you have one big deficit area, you need to focus on fixing it. So I know that I, for the most part, have a good track record. So when I'm wrong, I'm pretty frustrated. I'm pretty hard on myself. So that's a setback, because I have to reorient. Okay, what happened? You said to just treat everything as next. Why is this bugging you? And then I have to figure out what to fix. So I don't want to do the same thing over and over and over again and make a mistake. I really want to fix it. So a lot of this has to do with a lot of self-reflection too, which some traders, that's why they prefer an automated program. They don't want to be angry with the market or angry at all. They don't want to feel manipulated. They don't want to feel lost. They don't want to feel demoralized because they identify with their trading losses. So they eliminate that completely, and they do some automated trading strategy. It feels much, much safer. And if that's your thing, find a good one. You're still going to lose. So this is a 100% injury sport, just like hockey, just like football, not baseball, just like, performance anxiety about getting hurt. You will get hurt in this market, in every market. The question is how quickly you get up and how much you are exposed, how much vulnerable, capital and emotional capital you have, so that when you get hurt, it's harder to get up. Don't do that. So don't risk more than you're willing to lose. So if I know that a setback is going to hit me emotionally, then I will pull back. I have to. It's almost like I have to re-energize or refocus, or I just need the time. I'm not a robot. I am human, and setbacks hurt, but I am also very persistent. So what's your quality? Like, what do you have that's a real strength and not a fake strength? We all have fake stuff, right? But I'm talking real strong skill set that you can be confident about. Go to that place. That's really where you have to go and find your power. So when you find your power, where you find your strength, you find your confidence, not the fake stuff. I'm not talking about being cocky and what other people think of you, but what you actually really know to be true about yourself. You're going to crush it. You're going to crush it. There's no question. So setbacks, learn from them. That's it. All right. Pivotal points in my career, it keeps changing. I won't know what's next. I have some goals. I'm working towards it slowly but surely. Healthy relationships with trading. Well, I have a routine. They talk about time management, but again, this is a personal journey. I do my trading room every morning, so I'm religious about that, set aside time, and every afternoon. But then I let my mind wander. I need that freedom to explore, to read, to think, to DM with other Twitter colleagues, to play around with my indicators. I need to be unencumbered and uninterrupted so that I can actually figure some stuff out randomly that just kind of occurs organically. So for me, I have this balance of structure and flexibility. I need that. It's absolutely critical for my style of analysis, which is not normal, I think, in most services, because most services, they promise you a daily, and it might say nothing. It might be total fluff. I promise you to tell you when it matters. So that means I have to be in my kind of zone in the morning to help clients and figure out the trades and manage the trades. And then I need to be left alone to figure out what's next. So then I will write about or post annotated charts or trade setups that matter to me. That's it. So you get the best of me because I'm free to do that. So I couldn't run a trading room all day long. And no, I couldn't do that. It'd be terribly detrimental to everything I do. But I can do it for, slated periods of time. And that engagement is very helpful. It also forces me to look at everything and be accountable for everything and track everything. So I love the balance. For me, that's balance, structure and flexibility. The spiritual, mental, physical routines. I wish I had more exercise. That's a failing on my side. I used to be really, really good about that because then that was my natural anxiety reducer. Now I work all the time. So I work at least 12, 13 hours a day. And in this seat, I might change it to a yoga ball and then I come back to the seat. So right now I'm not really that healthy in my routine, but I am very laser sharp focused and I'm making really good money. So that compensates in my mind for a short period of time. But this summer I will play catch up. Like I will take 2 weeks off in August, I will have more quality time. It'll slow down. The market hopefully will as well. It typically gets much, much less eventful come August. The point is right now I'm pushing very hard. So I don't mind periods of sacrifice where I'm pushing really hard. This one, however, seems to be going on for months and months and months. But I wake up happy. I think that's very important. Are you in a good situation personally where I eat well? But no, I think exercise would be a huge benefit to me. I know it is for anxiety purposes, but luckily I have good energy and I have good focus. Not everyone does. And by the way, focus is not the same thing as attention. So my focus is very, very sharp, but my attention is horrible. I have solid ADD. It's not even a little bit. So who knew you could make a career out of this? But being able to scan, this is another thing, being able to scan and synthesize all this market moving data real time, but also pull out and look at a swing and a trend time frame from a technical, view out to a macro view. That ability to ride the waves, and again, that's attention that is not focused on any particular silo of data or approach, but somehow it comes together in this wonky little, hybrid system that works for me. And that's basically, what you got to find out is what system works for you. I do not journal my trades because everything's in Slack. Everything's in my trade account, so I don't need to. I write incessantly for clients. So for me, I have a very different situation where I am live commentating every day, right? That's recorded with closed captioning. And I have a moderator who writes everything down and summarizes it. So, I mean, talk about a journal. Plus I have everything, recorded. So, in Slack and all the trades. So I have too much journaling. There's all kinds of ways to go back and just search in the search bar, Google, what did she say? Carvana, what did she say? It's really pretty clear that I have a lot of journaling, but that doesn't mean it translates necessarily to what you're talking about, which is really identifying what went wrong. You have to do that on your own. I just think that's a personal experience. Same thing with overcoming fear and greed. I look at the process more than the results. So that means there was even a period where I tried, and it worked actually really, really well, not even looking at the numbers. I know that sounds like what, but for me, that really worked, because if I saw the numbers, too much green or too much red, it would paralyze me. That's not a good thing. So that to me really allowed me to really have confidence in my process. I could go the distance without getting out too soon or too early or taking on too much loss. Again, over trading is still an issue for me. So biases, new. So I have, when it comes to coming up with these, these trend ideas, these swing ideas, these chase ideas, I don't have a bias. I'm very flexible. I'm looking at the bear and bull case for every single trade. What does that mean? Like a lawyer. I kind of wanted to be one when I was younger, but that wasn't destined to be. So the point is, I look at every trade and I look at the bull and the bear case. Why do I do that? One, because I want to know if the wind is at my back or not. And two, I want to know how to defend it if I'm wrong. So I don't have this bias in my head, whether it be for the market or for a trade, a market direction or for a trade. I am testing it constantly. For me, I want to learn. I want to get out of the market, not just returns, but I want to learn from it. So what did I do right? What did I do wrong? To me, that allows me to kind of come into a trade and know what could go wrong from the very get-go and how I'm going to defend. So I'm lucky in that I don't come in with a lot of biases, except when I'm over trading. Then I find, oh, I guess I was a little bit too overconfident. I had a basket of trades, didn't work out. That's a bias. So that's a bias I need to guard against in the positioning. So yeah, that when it says learn from your worst trades recently, it's definitely too many positions in the same direction that don't have enough time. So my number one thing is I get confident that a market call is really good, but then it's taken forever to execute. I'm not wrong yet, but it hasn't taken off. So then I find that I really, really, really had to add more time. So I've learned in chases, for example, I use weekly options in chases, maybe a monthly. In swings, I typically start out with a call spread at the money, and I add, 2 or 3 months out. With a trend, I'm 3 to 6 months out. So I've learned to add time, to zoom out, which is really, I think, a skill set that young traders or new traders maybe even old, just stuck in their way traders don't do enough of. So some are very risk averse and they're going to get leaps and only leaps. And some are doing these, DTE on Friday kind of, at the end of the day. So I'm neither. So this to me is the challenge is managing too much because I am too convicted. And when it does slow down, what do I have to do? What do I have to very quickly fix? So drawdown and flawed approach. Well, drawdown is mathematical and a flawed approach is obviously very subjective. So one is not subjective. So drawdowns obviously in options are for me less concerning because I'm not selling. Very rarely do I sell options. So it's basically more controllable. But the flawed approach is that I just expressed, right? I want to find out what I'm doing wrong, and it's usually not adding enough time. All right, so that was there. And then what's in chat? Okay, so I have an article, Carl, that I tweeted out recently. It's very sad, actually, that new traders coming into the market lost a lot more money than they made, to the tune of about like 80%. So when you talk about, do I have evidence for new traders when it comes to their mental approach to the markets? Okay, right now, that was a brokerage account of new traders coming in and quantifying how they did. So they were playing way too many lottos. This I know for a fact anyway, because I track that stuff. Tiffany tracks gamma, which is single stock gamma flow, option flow. And it's that positive gamma, begets positive gamma like we had with Tesla and the whole market in 2020, end of 2020 and all of during 2021 for the most part. And then negative gamma begets more selling. So the point is that this is something that they were playing in this gamification of the market, right? We know electronic games. Well, they were doing the same thing with the market and crypto, and it worked very badly when it turned, and they didn't know when it turned. So they kept trying to go long, a counter trend rally in a downtrend. They didn't know. They didn't know what I knew, right? Or they weren't a client when I was telling everybody in November, we're topping, December, we have topped, January, we're rolling over, we're done, NASDAQ's done. We're not going to see all-time highs for many years. That was it. That was my call. So they don't know that yet. They'll learn it if they stick around. And I really, really hope that the new traders do stick around, especially the women, because women are very new to this wealth generation engine of doing it on their own. And they came into the market, new traders, large amount of new traders. We know that the retail bid, but most of them were women. There's 56% of accounts were opened at brokerage firms by women. So the good news, I think women are risk aware, not risk averse. That's just, folklore. But I think they're going to do a good job of getting into a place of learning about the market. That's what I have found, even with the young traders in Discord and the ones that I've hired for my trading desk. I mean, they're so smart. It's just amazing. Oh my God, just leagues beyond what I had at that age, leagues. So what I have now is experience. So that's what I share. Why double down on oil? I have a very strong thesis on oil, William, very strong. So I had a very strong belief back in March, back in summer of 2020. And it's a mantra. If you follow me on Twitter, you'll see it over and over and over again, things over paper. So I believe that yields were done going down, bonds were done going up in August of 2020. That would rotate into the energy outperformance theme. Then Q1 energy not only leapfrogged technology, but all of 2021 it outperformed, and still in 2022 it outperforms. And you know what's happened with tech. So that was my rotation call for my intermarket analysis. I'm very, very strong in my intermarket analysis, so I tend to rely on that heavily. So I came to that point where in March, I said, guess what? We're still going to go higher in oil. In fact, we're going to go to 130. We're going to double. And when we double by March of 2022, we're going to double again So I've written all this for clients. I've talked about this in multiple podcasts and presented here on it as well. Macro, intermarket, fundamental, technical, energy crisis globally. I mean, we deficit, nat gas, diesel, you name it. I am very bullish the energy patch, and it has paid, and my clients have made a fortune from that call, and they're still making a fortune from the refiners that are, 10 times their best profit margin. They're making 10 times more in profits than they have ever made, et cetera, et cetera. So my point is, I'm very, very comfortable with that space. So yeah, I'm bullish oil. Yes, if we get an end of the Russian war, we will have some softening in oil prices. Yes, yes, but that's not right now built in, is it? Yeah. So, yeah, Martin, that's an accounting question. You're going to have to talk with your accountant, or there are accountants that specialize in tax treatment. You can file a mark to market if you have losses, which is, I think, going to be very popular in 2022. There were outsized gains in 2021, and tax receipts have shown that. So we actually doubled receipts to the US government, meaning folks paid twice as much on average in taxable income and capital gains. It was a huge year for the government. But 2022, we have very large losses. So mark to market is a fashion that you can talk with your accountant about, but I think you got to do that pretty quickly. Otherwise, it depends. It depends. I don't know your short term, your long term capital gains. Talk to an accountant. That again is a personal, consultative type of role. I don't do that. I don't even do trader psychology, but it was a topic that seemed popular, and I said, okay, I've never done this before. I don't want to present on anything. I mean, if you've seen my presentations before, you know that I have a trading plan as it relates to technical analysis, my time frame congruence. Clients, when they come into Slack, they have all of my technical indicators, that they can set up on their own charts if they want to. If they're an annual client, I give them my entire setup. I created my own indicators, my own scans. I even recreated, some popular scans that other folks are paying for. It's not rocket science. You can actually do it on your charting platform. So I can get a little geeky. But that's, again, just part of me trying to play with the market to see if I have better odds. I don't have odds on edge when it comes to earnings. We have NVIDIA after hours. We can definitely take a big hit. We can also stabilize a little bit and bounce. So we're going to, see what that looks like when I close and into tomorrow, and then we'll trade accordingly. This crypto outlook is very, very weak. So back in January, I said, if we don't get above 49,000, I don't think we will. We're going to head down to 30, and then we're going to get cut in half again. So my crypto, Bitcoin specifically, my BTC USD call back in January for 15,000 has not hit yet. We're still hovering about 29,000. And just keep in mind that we could bounce, of course, but I still have that very solidly in mind. And the Bitcoin core and timing, equity, weakness or strength. So that matters, right? There's a lot of speculation, and money leaving the crypto space will also continue to weigh down, as will more selling. And honestly, my baseline bet for the market is we have not even seen panic selling yet. The money that came in November of 2020, which was large, and if you recall, it was a kind of a triple in the markets. We had a strategic technical breakout level. At the same time, we had the election. Biden won, and there was expected blue wave, which basically just meant fiscal. So there'd be stimulus. Liquidity obviously drives equities higher, and the removal of that liquidity pulls equities lower. We're seeing that in real time with monetary policy. But the point is, the third thing was the Pfizer vaccine on November 9th. Everything gapped up and went, wild into that November top. So I'm seeing this as we have come back down to quote unquote fair value. We're still overvalued at 4,000 SPX, and there's more selling ahead. So take care. That's another thing. Don't be afraid to go to cash. And don't forget that you buy on the way up, you sell on the way down. We are going down the mountain. We went up the mountain for 13 years. We've had QE, QE, more QE. Oh my God, QE. And now they're taking it away. So rate hikes and quantitative tightening and even selling of mortgage-backed securities is lack of liquidity. So if you really, really think that your positions are going to do well, then you need to be realistic. You're working now. You're working now against the current. You're swimming against the current. Number one. Number two, cash is a position. You do not have to trade every day. You do not have to trade on a 15-minute chart. You can zoom out. You can absolutely learn option tactics that will define your risk. There are a lot of strategies out there. There are lots of ways to make money. The trick is not to lose it and not to lose more than you're willing to lose. That's it. That's my presentation. So I'm going to wish you a great summer. And Dave and Anka, thank you very much. I hope it didn't mind. I didn't have a presentation template. I just thought a little talk. And then Tiffany got some questions from Discord folks. And I thought, you know what? I'll just do this winging it thing and see how that goes. And hopefully it helps. But I see Carly's up next, and I'm sure she has much more to add in regards to a very structured path, which is very important to defining risk, by the way. I'm not saying it's not. I'm just saying how I got here. But my trade setups are obviously very defined and they're relegated for clients. So if you want to find out more, go to LaDuc trading.com and you will see I have the Discord product, the Fishing Club product, as well as the product. And I have a team, by the way. I have a trading desk, so I'm not the only voice. I am definitely the it's my company, so I'm the lead. But I have, oh my gosh, I have a dedicated hedge fund manager on the macro. I have an oil and gas trader. Oh my God, a futures trader, advanced options, which by the way, these folks are also giving education on how to structure advanced options. So if you're, selling options, how to take care and how to position. Momentum trader, a commodities trader. Commodities are, important, right? Things over paper, which is basically that hard asset over tech, that bond proxy sell-off. And then gamma. So this is important. Gamma has absolutely a huge hand in the market structure, bullish or bearish. Right now, we're in negative gamma. We can become positive again. But the point is that gamma underlies tremendous amount of the option flow. And the option flow is now the flea on the tail of the dog. So option flow is much bigger than equity trading. So it's literally moving the underlying equity. So options matter. So I have a gamma trader as well. So I have a full desk, and you get all of that for Fishing Club, a community in Discord, and you get very one-on-one, customized presence with Craig, the hedge fund manager, for the, let's call it larger portfolios and money managing institutions. So I wish you a great evening. Yes. Oh my God, I forgot that. You're right. Okay, hold on. Share screen real quick. You're smart. I completely forgot. Okay, that's the LaDuc trading. And let me see. James did send me something. You're good. Hold on. That special thing, right? Where is it? Okay, this. Yes. Oh my God, you're so good. I'm so bad at this. Okay, so hey, William. LaDucTrading.com/event. This is $100 off your first month membership in my Fishing Club. There is a totally different, I don't even know if there is anything going on right now with Discord. There is, but you'd have to, this right here. That's it. So Discord/Discord. This is Edge. There's no special with Edge. And then this is the event. So check it out. Okay.